I'm very pleased to be able to speak today to Dr. Fan Fang, the Director of the National Institute of Economic Research of the People's Republic of China, and also the Chairman of China Reform Foundation, which researches into China's economic policy. And Dr. Fan is reputed to be one of the most influential economists in China, with an in-depth view of what takes place within the policy-making community. Dr. Fan, you're also the academic advisor to PBoC's Monetary Policy Committee. Now, is that the Chinese equivalent of the FMOC? And what's your role in that committee?
Okay. It's totally different. It's a monetary policy committee, but it's an advisory committee.
Okay.
It's not a decision making.
Okay.
And we don't have the voting power to decide what the interest rate should be. Most of the member of this committee is from a different economic department of the government. So I'm the only one as an academic member of the committee. We meet regularly to discuss the issues which concerning the monetary policy.
Right.
So this provided a broader view from other sectors, from other decision-making bodies of the economy. For example, it's a representative from the Vice Chairman of National Development and Reform Committee, okay, and Vice Deputy Minister of Public Finance, people from the other regulatory bodies, banking and insurance and the securities, and also some representatives from the banking sector. One member is from the commercial bank, the Association of the Commercial Bank.
Right. So you have a vantage point of view in terms of how the different influences take place that contribute towards policy decision making in a sense. Tell us, from your vantage point of view, what you think are 2 or 3 of the most important priorities in the Chinese economy today?
Yeah. Well, first of all, of course, at this stage, the most important thing is how to keep the economy going and to avoid the big slowdown of this from this kind of recession, global recession. How to maintain the growth of the employment, and how to maintain the stability of the economy, because these ups and downs may cause this big slowdown, and then it may cause the sharp growth again, another bubble again. So the first priority, I would say, the short-term macroeconomic policy and the stability. And secondly, of course, now the concern in the short run and the long run is how to increase China's consumption, particularly the household consumption, right, and how to lower down the saving rate. It was too high. Right. 51% of GDP is savings. Right. And household consumption only accounted for 35% of GDP in 2007. And I think the 2008 is basically the similar. We haven't got the final number, but basically a similar situation. So that itself is not sustainable. And particularly now, when U.S. lower down its consumption and increases the savings, right, well, the household
someone
sector,
has to spend.
Yeah, the household sectors as a whole, as a national economy as a whole, the U.S. now is it's a decrease in the savings because the national savings, government deficit is increasing. Right. But in the short run, in the medium run, you will see that the U.S. consumers will spend less, right, and save more, and that will have a big impact on the global market, right, and on the China's exports.
In that sense, there are a number of structural challenges that China has, and has to put in place for there to be a strong domestic economy and domestic consumption. Of all the structural priorities in China, domestic structural challenges, which would you say are the most important right now?
You mean these saving, consumption, structural?
Yes.
Yeah, around this, I would say the first priority is not Social Security. It matters, but Social Security mainly concerning the household saving. But the household saving has been quite stable. It's in contrast to many people's perception. Chinese are not really increasing its savings as a household, as a consumer.
Okay.
Real increase or real jump of the national saving came from corporate sector. Corporate sector, the savings increased dramatically as a proportion of total savings.
As in retained earnings, basically.
Return earning, undistributed revenues.
Right, which they take in bags and put in the banks.
Yeah, that's right. That's right.
In the banking system, yeah.
And of course, the good side of this story is that their profitability is increasing.
Right.
Their efficiency is improved. Their technology is improved.
Right.
Reforms that really change the regulatory framework, and then they can compete more. And also, China is in the stage of the earliest development. Wages low,
right,
and increase of the wages are less than the improvement of the productivity.
Right.
But also there are some fiscal problems. For example, Chinese resource industries don't pay royalties.
Right.
In the past years. And the Chinese state company do not pay dividend to the state budget.
Right.
They pay their holding companies, but the holding company hold that and to reinvest.
Yeah.
So all these things matters.
And
I believe most people realize the Social Security things, and the government already work on that. And the government start to realize there's a problem in the fiscal side. This is the resource taxes and the dividend redistribution. But there's some changes.
Right.
There are some improvements, but very slow.
Right.
How to reallocate those revenues from one sector to other sector, how to reform the taxation system, reform the fiscal system. I think that's at the moment, I think that is the first priority.
Right. But is there a trade-off between taxation and dividends? In that Chinese state-owned enterprises do pay high
taxes, but they pay the same taxes than others than the private sectors. But private sector capital is from their own savings, but this is a state capital, and a state capital you're supposed to pay state dividend.